Our next speaker, we've had a number of conversations with her over the last couple months. She's done a deep dive into learning about you and how to help your businesses. She's an entrepreneur. She runs companies that generate over $50 million a year in revenue. She is an author. She's a sought-after keynote speaker. And she, as we mentioned this morning, is the person that Michael Michalowicz, that guy, leans on to come out into the real world and teach the concepts of profit first and all in. So we're glad to have her. Excited to introduce you all to Danielle Mulvey.
Hi, everyone. Thank you so much. So, Profit First, has anyone read the book? Anyone implemented it? Okay, wow, excellent, excellent, excellent. So, Profit First was written by Mike Michalowicz. Profit First is not an accounting system. It is a cash management system. And the best thing about Profit First being a cash management system is it is a do-it-yourself cash management system that you can do in less than 5 minutes twice a month. So I know you guys are all busy, we're all entrepreneurs, we have full schedules and such, but I'm asking for 5 minutes twice a month, 10 minutes a month, that's all it is. So, as Dan mentioned, I am not the author of Profit First. My business partner, Mike Michalowicz, is the author, but I am the host of the official Profit First podcast, Profit First Nation, so hopefully you can tune into that as well. Mike and I go way back. We first crossed paths, oh my goodness, more than 20 years ago at a program called Birthing of Giants at MIT. So we just have been aligned and in each other's universe for a long time. And then tomorrow I'm going to speak about All In, and we collaborated on that book together. So, but I'm the one who comes and hits the pavement and really does the workshopping aspects of Profit First. I started my first business back at the ripe old age of 25. It was an advertising and marketing firm in Nashville, and I just knew how to have a better product, a better service. I was pretty good at building a team after a couple of years and such, and I thought, okay, I got this down. I just need to hire the number one CPA firm in town, and if I hire an in-house bookkeeper, then I'm good, I'm covered. Because I don't know accounting. I started my business, I wasn't planning on being an entrepreneur, the opportunity just kind of presented itself, so I took it when I was 25 and just ran with it. My dad had run businesses, I grew up in an entrepreneurial family, never taken an accounting class, so I thought, I don't need to learn accounting, and again, hired that CPA firm and an in-house bookkeeper. But what I was really doing was I was burying my head in the sand when it came to the numbers of the business, the cash management of the business, the accounting and the finance. Just because you hire the top-notch CPA firm and just because you have an in-house bookkeeper or accountant working for you, they can't own the financials of your business. You are the owner of the business. Only you can own the financials of your business. Bookkeepers, accountants, CPAs, all of them, they're good at compliance. They can put the numbers into the right boxes for you. But they're not typically business owners themselves. And it's not their business, and they're probably helping multiple businesses and such. So one thing is that if you're burying your head in your sand when it comes to the finances of your business, that's the struggle right there. And I get it. You know, it's uncomfortable. I tell people all the time that it'd probably be more comfortable if I asked you to get naked than show me your income statement, right? You'd rather just like strip down and let me see it all instead of sharing that income statement that probably isn't as attractive. So, but 83% of small businesses are operating check to check, burying their head in the sand when it comes to the finances of their business. So we've sort of normalized that it's okay to bury our head in the sand when it comes to the finances of our business and the numbers of our business. 83% of businesses are operating check to check. That means probably in this room, 8 out of 10 of you are operating check to check. I was operating check to check, even working with the best CPA firm and having a bookkeeper in-house. The problem with this and the majority of businesses is we tend to wear a badge as an entrepreneur that, well, this is what being an entrepreneur is like. When I first got married, I had already been in business and an entrepreneur for, let's see, oh my gosh, about 5 years. And we get married and things are going well and such, and then one weekend, my husband goes, hey, I looked at the bank account, it didn't look like we paid ourselves. And I laughed, and I said, well, of course we didn't. I'm an entrepreneur. Sometimes we pay ourselves, and sometimes we don't. We pay our employees first, we pay our vendors, we prioritize everything else except ourselves. And this is normal. This is what 83% of businesses are doing out there. And we wonder why there's such a high rate of business failures. And the reason why there is a high rate of business failures is it's a failure to manage the cash in your business. So 25 years later, thankfully I've figured this out. Thankfully I've implemented Profit First. And so my collective businesses do over $50 million a year in annual revenue. And it's because I have taken ownership of my financials. And I'm going to challenge you today to take ownership of your financials too, in just giving yourself 10 minutes a month, 5 minutes twice a month to manage the cash in your business. So the fun thing about money is it's 10% logic right now for most of us, which is why we tend to bury our head in the sand, and it's 90% emotion. So we all have money stories in our head. Everything is about mindset. You guys know this. And so if we're telling ourselves, hey, this is being an entrepreneur, sometimes we pay ourselves, and you talk to the majority of other entrepreneurs, the 83% who are operating their business check to check, you think this is normal, this is fine, this is okay. Maybe you grew up in a house of always fear about money or scarcity about money, and that has come along with you on your journey, and here you are today, burying your head in the sand when it comes to the accounting and the finances of your business. So, if we can boost up the logic part and implement a process and a system that does it for you, then you can remove the logic. So here's what I'm proposing. This is the problem. This is the problem. The GAAP formula for calculating profit, the generally accepted accounting principles of the formula of how you calculate profit. This is how your income statement and P&L is set up, right? You've got the total sales at the top, then you have cost of goods, then you have expenses, and then you have profit at the bottom. The bottom line, that's the profit, right? The problem is that when we take sales minus expenses, we tend to prioritize those expenses, right? Gotta spend money to make money. Oh, we need this new piece of equipment. Oh, if I buy 10 instead of 2, I'll get a 15% discount. Let's buy 10. Let's spend that cash. I see the cash in the bank. Let's spend it. We think we have to spend money to make money. We prioritize the expenses because on the income statement, that's the majority of the income statement, right? You got maybe the top 20% is about the sales and the cost of goods, et cetera, but then all those line items related to expenses. We think we have to spend money to make money. So when we take sales minus expenses, what do we have? We're eking out maybe a little bit of profit at the end, right? We're eking out a little bit of profit at the end because we prioritize expenses. And here's the funny thing. Even that little bit of profit at the end, you're having to pay taxes on that, right? When it comes income tax season, I mean, who's counting it down now? Corporate taxes are due on the 15th, and your income tax that you'll pay on the K1 for your businesses is due on April 15th. And you might have had a great year last year. 2025 was your best year ever. You killed it, and you were profitable. And you're going to get that K1, and your taxes are going to get done by your CPA, and he's going to say, oh, by the way, you owe this to the government because you were profitable last year. And you're going to be like, great. Where is it? Where's that profit hiding? Where's that cash? And they're going to be like, oh, well, you probably reinvested it back into the business. You put it back in. You just turned it over. Which, yeah, that's what you've done. Because you don't have a cash management system in place. When you have a cash management system in place, you know where the money is. The money has a purpose. So we're going to get more into that in a little bit. But what I'm going to challenge you to do is let's put Jabba the Hutt on a diet. Because part of the problem with why we tend to spend on expenses and think that we have to spend money to make money is because we're most likely operating out of one business checking account. And this is why the 83% of small businesses are operating check to check. Because money comes in, goes into that one business checking account, and gosh, that manufacturer is running a special on that piece of equipment that, I mean, if I buy this piece of equipment, I mean, we can definitely like double our capacity. I mean, I already have customers that have asked for this type of output and such, and we haven't been able to do it. And I'm looking at the checking account. We've got the money in our checking account. Let's spend it. When you're operating out of one business checking account and you think you got to spend money to make money, you've given Jabba the Hutt, the OpEx monster, an all-you-can-eat pass to your cash in your business. And so when you see cash in that one business checking account, you're like, we can spend it. Oh, and we can get a discount if we buy 10 instead of 2. Let's spend it. Let's spend it. I see the money, we can spend it. And that's why we have nothing left over. Because we saw money and we spent it, but we spent it on expenses. It all went to expenses, which means that we have little to nothing left in profit. So profit first flips the equation. So in profit first, we're going to flip it. Sales minus profit equals expenses. Simple. Because what we prioritize gets done. When we prioritize expenses and we think we have to spend money to make money, we see the money, we see it in the account, we got to spend it, it goes, it's gone. That's why 83% of businesses are operating check to check. We're going to focus in on the logic. We're going to put a process and system in place to take the emotion out of it. In 5 minutes, twice a month. So profit comes first. So what does this look like? So this is what it looks like. This is the big reveal. When a customer pays you, that money is going to go into an income account, at your primary bank. Then on your designated allocation day, so the book recommends allocating twice a month on the 10th and 25th. So the 10th and 25th would be twice a month. In my businesses, we allocate on the Wednesday prior to a Friday payroll. So if you have payroll and you're paying bi-weekly or fortnight, you're from Australia, but I don't think anyone here is from Australia, then you would do your allocations every other week prior to a Friday payroll. You don't want to do allocations any more frequently than weekly, okay? Because this is a rhythm. This is a rhythm, and the rhythm has to happen at the same pace for it to work. Because now this is going to normalize your cash flow. This is a cash management system. It's managing the cash in your business. I'm not asking you to reconcile your bank accounts. I'm not asking you to code your expense entries and such. I'm asking you to manage the cash in your business. So, customer pays you, goes into your income account at your primary bank. Let's say it's the first, it's the second, it's the third, it's the fourth, it's the fifth, and your allocation days are the 10th and 25th. So, on the 10th, the money that is accumulated between the 26th of the prior month, that was your last allocation date, was on the 25th, so then that account went to zero, and then you started accumulating cash again on the 26th, up until the 10th. All that money has been accumulating in the income account, and on that designated allocation day, you're going to allocate from the income account. And you're going to allocate it to 5 accounts. You're going to allocate first. Priority is important. Order is important. You're going to allocate the first amount to your profit account at your primary bank. Then you're going to allocate to owner's pay. Yeah. Because you, each and every one of you, are the MVPs of your company. You work the hardest. You work the longest. You have the most risk. You have the most passion. You have the most on the line. You care so much. And if you don't pay yourself, you're going to get burned out. Your spouse is not going to be too happy with you. Your kids are going to be frustrated when you say, oh, you know what, sorry, we're going to have to take a break from club water polo this session because we're running a little tight because I haven't been paying myself. So we're going to prioritize paying you because you deserve a paycheck more than your employees. Then we're going to allocate to tax, okay? The tax account is to reimburse you for the taxes that you owe. So when it comes time, April 15th, or your quarterly estimated taxes that you need to pay, you're gonna take it from the tax account. This is not sales tax. This is not local taxes on the business. This is the taxes that you have to pay. Okay, as an owner. And then you'll allocate the rest to the operating expense account. Really simple. Really simple. Doesn't even really take 5 minutes. I was exaggerating. Then after you do those allocations at your primary bank, so you're going to have 5 accounts at your primary bank. Your primary bank is where you're banking now, probably. You're going to have the income account, which is probably you have at least one account. So you're going to have an income account, you're going to have a profit account, owner's pay, tax, and operating expenses. So I recommend that whatever account, the one account that you have now, make that your income account because the money's coming in there. And then open up a new operating expense account that you're going to pay out of. Because now we're going to force your hand to kind of look at those expenses that have just been kind of seeping out over time. And those subscriptions that you don't really use, or those things that are just, have been just happening on a recurring basis. So when you open up that OpEx account, that's a new, fresh account, and you get a fresh start to get rid of anything that's been leaking out of your company. So then after you do these allocations, you are then going to sweep the money from the profit account at your primary bank to the profit hold account at an inconvenient bank. An inconvenient bank. What's an inconvenient bank? It is a bank that is a pain to get to. It's a bank that requires you to drive an hour. It's a bank that you won't have a debit card for. It's a bank that you won't have checks to write. It's a bank that you will only go to 4 times a year on your designated allocation day. Because we're going to protect the profit. We're going to protect the profit. Now you're going to have cash in the bank to correlate to your profitability. What? Cash in the bank to correlate to your profitability. That's what the profit hold account does for you. And you're going to take your distribution when it's time to pay your quarterly taxes from your profit hold account at the end of every quarter. And that is your reward for owning a business. This is why we're in it, guys. To be profitable, to grow the business, to be profitable, to be valuable. Because I want to also just talk something maybe a little kind of dark, but I've seen it too often, and I have to give this kind of public service announcement. You need to be building a profitable business that has value and can be sold. Because we could be hit by a bus tomorrow. And I know there's, spouses here that are involved in businesses and such, but then there's some that aren't involved in businesses. Or you both could get hit by a bus. And then what happens to the business? If you don't have a healthy balance sheet, if you don't have a solidly profitable company with cash in the bank to correlate to the profitability, the business value that you have is like nothing. And how is that going to take care of your family? How is that going to take care of your kids or what other family obligations that you have if you're no longer here to run the business? Or you become incapacitated for an extended period of time and you need to sell the business. So do this for your family, your children, your spouse. Make your business profitable and valuable. So in the event you have to sell your business, you're going to get top dollar for it. Okay, PSA is done. All right, so then you're also then going to sweep from your tax account to your tax hold account at the inconvenient bank. And when it comes time to pay your taxes, you go to your inconvenient bank at the end of the quarter. When you go to take your profit distribution, you also go and take the money that you need to pay the taxes for your quarterly estimated taxes. Oh my gosh. Do you already feel lighter? Is the stress gone? Wait, I've got the money in a special account to pay my taxes? I want to make April 15th National Profit First Day. Because once you've implemented Profit First and you don't stress about paying taxes anymore, your life flips a switch. And you're no longer an 83%er operating check to check. You're part of that cool crew of 17%ers who are profitable with cash in the bank to correlate to the profitability, with cash in the bank to be able to pay your taxes without any stress, and you are building a valuable company. Choice is yours. You want to be an 83%er like everyone else, struggling and wearing that badge of honor, not paying themselves? Or Do you want to be that 17%er who's crushing it because you've learned how to manage the cash in your business? All right, a couple things about these profit hold and tax accounts. A lot of people say, oh, you know, when I started taking over doing these keynotes and workshops for Mike, I traveled with him and would go on the tours with him, and it was just amazing to me when people would come up to him and fan out, and I get it, like he's an epic author, and they'd be like, oh my gosh, this is the second time I've seen you, I've read the book 3 times, I've listened to it on audio twice, and you go, great, how's it working out for you? And they're like, oh, well I haven't implemented it yet because I'm not profitable yet. Okay, so you're not profitable yet you've seen him do it live twice, you've read the book multiple times, and you've listened to it on audio. What's going to change? And you change nothing about your behavior. So that was sort of like okay, we need to work on this. So that's where we need a podcast. We need encouragement over audio that you can do this. And on the podcast, we have people sharing their profit first journeys. So, and actually, I'd like to introduce someone just in the room. Maybe she could take the mic later. But Randy is here, Randy Michelle, and Randy was at my very first Profit First keynote in 2018. And she took it, and she ran to the bank, and she opened up those 5 accounts, and then she slopped it. She lived in San Diego at the time. I think you probably slopped it to Orange County, and she opened up at the Inconvenient Bank that profit hold and tax hold account in 2018. Fast forward to 2026, she doesn't hate me. I still consult with her, we still talk. She opened up another business, added more value to her net worth, because she's figured out how to manage cash in her business. And she just told me today, she's so excited because she's starting a 3rd business. Because she learned how to manage the cash in her business. This works. So you can talk to Randy at the break, you can check out the podcast and find the profit first journeys of other people. But this profit hold and this tax hold account. So if you have debt in your business, so sorry, that person, and a lot of people say, oh, I can't implement profit first because I'm not profitable. Or they're embarrassed to go to the bank and open up the bank accounts because, there might have been a couple overdrafts in the last month. And right now that bank balance is, sub $1,000, but someone's gonna pay us tomorrow and we'll get back up to $10,000. So you're kind of embarrassed to go to the bank. So let's attack those 2 things right there. These are the biggest mental obstacles, the biggest emotional obstacles to implementing profit first. So the bank, let's talk about that. Your banker is most likely spiffed or bonused when they open up additional accounts for existing account holders. So when you walk into the bank, or you don't even really have to walk into a bank anymore, you can do this all online thanks to COVID. And you can open up these accounts without talking to anyone, most likely, at your primary bank. And you can name them this: income, profit, owner's pay, tax, operating expenses. It's effortless. It's easy. It will take you 10 minutes. In fact, one time I challenged a group of dance studio owners, and I said, okay, whoever sends proof that they've opened up their accounts, I'll do a one-on-one reverse engineering exercise Zoom with you. Someone did it in 37 minutes. From the time we ended the presentation, they went out, they logged on, and then showed me the proof. It took them less than 10 minutes. So there is no excuse, there's no shame in your game to open up these additional accounts. Now, sometimes I will say that, some bookkeepers, some CPAs who haven't read Profit First and who are more of the mindset of let's spend all that money so you don't have to pay taxes, aren't going to be fans of Profit First, and they're going to be like, oh, you don't need that many accounts, you can do this on a spreadsheet. You can't do this on a spreadsheet. Because the temptation is there. We're going to give your dollars coming into the business jobs. It's either going to go to profit, it's going to go to owner's pay, it's going to go to tax, or it's going to go to operating expenses. Okay? Now, teaser, I'm here for more after this. So I am doing a workshop after the break, and we will go into advanced Profit First, and we'll talk about how to dial this in a little bit more specifically. But I don't want to overwhelm you, and it isn't overwhelming, but we're going to take baby steps here in this first hour. So, so if you have debt in your business, how are you paying off that debt? You're probably servicing that debt from your operating expense account. Yeah, we're making the minimum monthly payments, and that interest keeps coming, and we're not making any progress on paying down the principal of the debt. This is where profit comes in. If you have debt, run to the bank, log online tonight, and open up at least a profit account. Because this is how you're going to pay down your debt. At the end of each quarter, on your profit distribution day, 4 times a year, 4 quarters in a year, you're going to go to your inconvenient bank, and you are going to take out 98% of what's in your profit hold account and pay down the principal on your debt. Then, once you pay that off, and when people do this, it's shocking. They're paying off their debt in a matter of a couple of quarters. I'm gonna be honest, when we implemented Profit First in our businesses, it was a bit of a power struggle. Husband, wife, he had his opinions on what to do with the cash in the business. I had my opinions what to do with cash on the business. And thank goodness for Mike McAllowitz and Profit First, because we both agreed that it wasn't going to be my opinion versus his opinion. We were going to put our trust and our logic into a process and a system that we don't have to think about. So we had a line of credit in our construction material supply business. And we had that line of credit for we had the line of credit, and then we used the line of credit for a project, and that project came and went. We got paid on it, but oddly, we didn't take the money when we got paid on it to pay down the line of credit. It just kind of became too easy. But when we implemented Profit First, that line of credit was paid down in 3 quarters. Done, gone. And guess what? Haven't had to take out a line of credit again since. Because we have cash in the business that we can bank on ourselves and do our own internal line of credits. When COVID happened, and they put out that money, and the banks were saying, okay, we've got these loans, and everyone was rushing to the bank to get the loans. We're like, gosh, we don't need it. We have money in the business that we can keep paying people, we can keep employing people, because we had implemented Profit First. And we didn't take that money. We didn't take any money. We didn't take the PPP loans. We didn't take the ERP. Now, call me stupid because that ended up being free money. I don't care. To not have to stress And to not have that and be able to take care of myself, my employees, and my family, because I have cash in the business, changes everything. There will never be free money again, like that COVID experience. Okay, so that's profit hold, and then on the tax hold account, same concept. This is to pay the quarterly estimated taxes on your business. It also is meant to reimburse you for the taxes that you pay in terms of payroll taxes as an individual. Okay, so this is a mind game. All right, it's a mind game. We're gonna change the way you think about money. We're gonna reduce and squash that emotion and turn it into logic. And this is based off of Parkinson's law and an empty tube of toothpaste. So when we have a seemingly empty tube of toothpaste, and we have forgotten to buy toothpaste when we went to the grocery store yesterday, and it's been a few days that we've been meaning to buy toothpaste, and that tube is getting emptier and emptier, and it seems like it is so just, there's nothing left. Do we walk out of the house without brushing our teeth? No. Because when it's the morning and that empty tube of toothpaste looks pretty empty, what do? We squeeze it. We get real crafty, don't we? So, it's like we take that empty tube of toothpaste and see, like just right below the tip. I mean, look at, there's a little juicy part left there. And we're not rolling it from the bottom. There's enough there that if we just get our thumbs under that, right? And maybe the toothbrush is like having to stick out of our mouth, so you got to put 2 thumbs into the toothpaste, and we squeeze enough, and we just get that little dab. A little dab will do ya. You really don't need that much toothpaste, right? Just a little bit. We'll get enough out of it to get it on the toothbrush and be able to brush our teeth, and then we're going straight to the grocery store or wherever you buy your toothpaste and getting a full tube of toothpaste. That's Parkinson's law. Parkinson's law is a function of effort over time available. So when we have a little time, what do? We put a lot of effort in. This kind of maybe goes back to college days, right? You would have a paper assigned at the beginning of the semester, a 35-page paper, and I don't know about you, but I went to school when there weren't computers and you had to type it. And so what did we do? We waited until last week before it was due, and then we started that paper. And what did we have to do? Oh, killer. We had to put all that effort into that last week, when if we would have just done a little bit at a time, if we would have created a plan over the 12 weeks of the semester, we wouldn't have had to put in extraordinary effort. We would have just be putting in a little effort at a time. So Parkinson's law tells us that when you have a lot of time, you spend a lot of time. It also applies to money. When you have a lot of money, you spend a lot of money. Which is why when you have just that one checking account for your business and all that money's accumulating in there, it looks like we got a lot of money to spend. But you don't. You really don't have a lot of money to spend on the operating expenses that you've been spending it on. When you put profit first, we're doing more with less operating expenses. I promise you, more than 1 million businesses have successfully implemented profit first around the world, and so can you. So, sales minus profit equals expenses. We're going to put profit first. Now, we can look at this in a different way too. When it's Thanksgiving, and that beautiful bird comes out of the oven and is put on the platter, do you pop it like this, into the table and step back and just say, have at it, everyone, dig in. No, we don't. What? That would be crazy. That would be a mess, right? No one serves a turkey like this on the table. What do? Well, we're not going to Jabba the Hutt it, because that would just be gobbling it all up, licking it off the bone. What we're going to do is, that turkey is analogous to your income account. All the cash is going to accumulate in that income account, and then you're going to allocate a portion to profit. We're going to slice a bit off, and we're going to put it on this profit plate. Maybe this is the section of the platter that's the leg meat, right? Then we're going to slice off and portion part of the income account into owner's pay. Then we're going to put it, maybe the breast meat into tax, and then the rest goes into operating expenses. Now, what's important here about this allocation and this portioning is that profit, owner's pay, and tax are 3 servings for you. And the rest is operating expenses. So right now, how are you paying your taxes? Maybe you're taking a distribution from your company and calling it profit, but paying your taxes with it. Maybe you're paying yourself, oh shoot, I've got taxes. I normally pay myself $2,500 on payday. This week I need to pay myself $6,000 because I've got to pay the tax bill. So you're hijacking your payroll numbers and your salary because we didn't plan for paying for taxes. So profit, owner's pay, and tax are 3 servings for you. We're just going to give the cash in your business specific functions and responsibilities to take care of you, to take care of your family, to take care of the future of your business. And then operating expenses is what's left to run the business off of. So you do these allocations based off of target allocation percentages. These target allocation percentages are based off of a study that Mike did of over 2,000 profitable businesses. And so based off of the company's real revenue, these are their allocation percentages. These are their target allocation percentages, okay? Real revenue is an important number to understand. It's funny, in accounting, sometimes there's a term that could have like 2 or 3 definitions. Real revenue is going to be your total sales, and I'm going to use book language, your total sales minus material costs, minus subcontractor expenses, and then what's left is your real revenue according to profit first language. Okay? We'll get more into this in the workshop. So, what's important to know though, how do you make this all happen? There's only 2 ways to increase profitability. And you have the power, if your head's not buried in the sand when it comes to your business, and you understand now how to manage the cash in your business, there are only 2 ways. You want to know 2 ways to increase profitability. Number 1, increase margin. We're going to talk about that in the workshop. You're going to be blown away. Right, Randy? Margin, margin, margin. I promise you, where there's a will, where there's a way, there's increased margin. And number 2, decrease expenses. It's not one or the other, it's a combination of things. It's increasing margin, I'm going to give it away, on some things. It's not that you have to increase by the same amount across everything. You find the things that are more profitable that you can add more margin to, and that's how you're making more money, incrementally. People, we tend to put things too much into like, there has to be one way, I'm looking for the one secret. Or I'm putting all my eggs in this one basket. No. There's ways to increase margin in each of your businesses, 100%. And then decrease expenses. So you're already going to decrease expenses when you open up a new operating expense account. And you're kind of forced to let that, kill the debit cards or whatever's been coming out automatically from that one business checking account that you've been having. So, Profit First Nation, we have a series, I think it's 4 episodes, on decreasing expenses. Everyone who implements Profit First, on average, decreases expenses by 10% like that. Woo. Wow. What does that 10% go to? It goes to now profit, owner's pay, tax. Some businesses have decreased their expenses by implementing Profit First a matter of 20, 30%. Because it's that much has been seeping out. So we're going to go from hiding from our financials to owning our financials. Not by doing the bookkeeping ourselves, but by managing the cash in our business. This is 5th grade math, guys. It's based off of percentages. It's not accounting. Really, it's not. I'm not asking you to log into QuickBooks. I'm not asking you to fire your bookkeeper, fire your accountant. I'm asking you to understand the difference between saving and spending. That's it. So what does allocation day look like? Well, based off your real revenue, you're going to have your target allocation percentages. So real revenue is total sales minus materials and subcontractor expenses. That's your real revenue. That's the number that's in the income account that you're going to do your allocations off of. You can also you're going to also peel out sales tax. We'll go into this in the workshop. If you pay commissions, those are kind of hard dollar expenses. And so you'll peel the commissions out. And then what do you do with deposits? Maybe someone has paid you up front 100%, but you haven't technically recognized that revenue yet because you haven't delivered it and such. We'll talk about that as well. So you wouldn't count that in your distribution because you haven't earned that money yet. You earn that money when you're ready to do something with it. So if you're taking a deposit because you need to, prepay for materials and such, okay, you're recognizing that revenue and it's being used. But the second half of it, that the balance due, that's when you recognize the revenue, and that's what goes to really your income account. But we'll go into that. So allocation day. Let's say your real revenue is between $500,000 and $1 million a year. So after we've taken out materials and subcontractor expenses. And on allocation day, let's say your income balance is $15,543.21. We've already peeled off the materials and subcontractor expenses. Then you're gonna pop it into the calculator. This will take you no more than 90 seconds. You'll follow the instructions. Enter the date in the gray box. It's color-coded. Boom. Verify your current allocation percentages. So your allocation percentages are going to change quarter over quarter until you get to the target allocation percentages. But we're going to keep these for the quarter. This is normalizing your cash flow. We're not going to tweak or hijack the percentages. This is why I'm up here. This is why I host a podcast. Because when I read Profit First and knew that Mike and I came from the same breeding grounds and such, I'm like, yeah, okay, I get this. Yeah, we get to the target allocation percentages, whatever, and we work our way there slowly, but yeah, I got this. Like, I'm a type A person, no problem. Like, set the bar, I'm gonna jump over it. So what did we do when I implemented Profit First? Yeah, I did that. I implemented Profit First using the target allocation percentages out of the gate. And that first allocation day, boom, we had a huge income balance, and when we did those allocations at those target allocation percentages, it was like, sweet, this is amazing, I love it, great. My husband was so happy. Then that next allocation day happened, and the income balance was a mere fraction of what it was on that first allocation day. And when we did the allocations based off of the target allocation percentages on just our second allocation day, it failed miserably. And that's when I said, all right, I was wrong. And that's when I decided in my spare time, because it doesn't take me long to run my businesses and oversee the operations, that's when I said, okay, I really want to do this right. I want a happy life, I want a happy husband. I'm going to become Profit First certified. So actually I went through the whole thing. You don't have to go and get Profit First certified. I'm giving you the clip notes and the cheat sheets and everything that you need to do and learn this. And then I also, in talking to entrepreneurs and getting to know Mike and becoming more involved in the organization, wanted to host a podcast and wanted to help people and such. So if you follow the plan, and we'll get to that, and don't do the target allocation percentage out of the gate, then you won't have to host a podcast. Okay, so then, now we enter the day, next step, you're gonna enter in the blue box your income balance. What's the income balance on the 10th? Or, I'm sorry, I labeled this the 6th. What's your income balance? And what happened? Boom. The calculator did it for you. It's an Excel spreadsheet. You'll get it. You'll get a copy of it. And now, what you're going to do is, what I do this. I have my accounting people, depending upon the company, on the designated allocation date, I don't even log into the bank accounts. Hey, tell me what the income balance is. And then I pull this up, and I enter it, and I see, because I kind of need to know what that income balance is. I need to know, depending on the company, like what's our target income balance on average for each allocation day? Because if I'm hitting that, then we're going to have a great year. If the income balance is high because we got, a big project or whatever, good, I need to know that. Because there's going to be other allocation days where it's low because ARs has more aging in it than we normally have and such. So this is me keeping a thumb on the pulse of our business. This is all I need to know about my business. What's our income balance? And if it's high, why is it higher than normal? And if it's low, why is it normal than lower? Why is it lower than normal? In our construction material supply company, we have a below industry average aging on accounts receivable. Because I'm on top of it. Because I see it, and because I told our team this is what it needs to be. And so we managed that. Okay, so I plug this in, and then I send it back to the accounting department, and they actually do the allocations. We use QuickBooks Desktop, because our ERP is connected to it, and we don't connect our bank to it, so we do the bank allocations, and then we do it in QuickBooks. And then, after they do that, then we do those secondary sweeps from profit to the profit hold account at the inconvenient bank, and from tax to the tax hold account at the inconvenient bank. All right, so remember, you're not going to start this at the target allocation percentages out of the gate. So this is what the rollout plan looks like. You're going to start with an instant assessment, and it's going to tell you where the money is going right now in your business. This is pretty common that you've got, nothing going to tax and a lot going to operating expenses. And we want to get to this target allocation percentage. So What we're going to do is, that's our instant assessment. How are we going to get there? We're going to get there quarter over quarter by moving each category up or down 1, 2, maybe 3 percentage points. We're going to slow the roll. Don't do it, Danielle. Don't think you're type A. Move each category up or down 1, 2, or 3%. And then quarter over quarter, you might get to one of the categories sooner. But it takes 6 to 8 quarters to implement Profit First. But guess what? You're going to have cash in the bank after that first allocation, after that first quarter, even if you just allocate 1% to profit. If you really want to slow this down, if you really want to prove this to yourself, then just open up one account. Open up a profit account and start allocating 1% to profit. With each deposit, you don't even want to do the allocation days, just allocate 1% from each deposit to profit, and that money will start to accumulate. Because you can run your business off of 99% of what you've been running it off of. So if you want to start real slow, start with 1%. So again, there's only 2 ways to increase profitability: increase margin and decrease expenses. Wait, can't I sell more? Selling more doesn't solve your profit problem. Your profit problem is in the margin being too low and the expenses being too high. When you just sell more, you exacerbate your profit problem. You're less and less profitable if you think you can just sell more at, excuse my French, shitty margins and too high of expenses. So, who wants to still be hiding from their financials versus owning your financials? You just have to know the difference between saving and spending. This is 5th grade math, guys. This is taking dollar amounts and multiplying it by a percentage. So, when we came into this, you're probably applying 10% logic and 90% emotion into the money and finances of your business. But with Profit First, let the system take over, let the process take over, and now move the logic of managing the cash into your business to a proven process and system that has worked for over 1 million businesses and has worked since 2018 for Miss Randy in the back of the room. This is in the back of the book, and I'm just gonna read it. Trust the process. This works, but it's unfamiliar, so you will resist. But commit to it for now, even if it's just 1%. Relinquish your resistance and the comfort in doing what you've been doing in the past, operating out of one checking account. First, trust the process, and then prove it to yourself. But the definition of insanity is doing the same thing over and expecting different results. So if the cash isn't working for you in your business, you don't have cash in the bank to correlate to your profitability, something's got to change. So I challenge you to change it. We're going to, at the break, hand out the checklist and go through that. If you text PROFIT to 33777, there's over 150 episodes of Profit First Nation, but we have curated playlists. So, you can start where you want, kind of a choose your own adventure. You don't have to start at episode 1 or at the beginning, but what feels right for you. And so, and we have those Profit First journeys as one. Other people who've implemented Profit First and talked about how that journey went for them. And then we also have visual recaps of the episode, so kind of like additional resources and such. And so you'll also get the PDF that gives you the entire library of the visual recaps so that you can follow along, get a little bit more detail and such, because I know we're listening and driving and doing other things and such, but I really want you to be successful with Profit First. The secret is coming next. The secret to being wildly profitable is in reverse engineering your business, which we will do in the workshop, which is coming up next. So I'll see you in about 15 minutes, and cheers to a profitable future. Thanks so much.